It is time for the investment committee for July. We've had a couple of recent updates that we want to get you guys aware of what's kind of going on in our minds, especially with what's going on in Iran, with what's going on globally. Market update is going to be a quick little rundown on what we've seen over the past month and year to date. Some recent news stories, including that and some more. And then always like to finish it up with some charts and graphs. Why not? It's pictures depict 1,000 words. So let's get this rocking and rolling.
All right, let's do it. So first, I want to give you guys a review of the market vitals. So far, the S&P 500 in 2025 is up about 2.2%. So after a pretty tremendous V-shaped recovery in April and May, the last month has been a little bit more tame. The S&P is up about 0.5% over the last 1 month after coming back almost 20% from that April low. If we look at some of the major indices and how they've performed over the last 1 month, I think the thing that stands out the most, the total international stock index up almost 2% over the last month. That beats out all of these other US centric major indices that we have listed here. So that international stock index continuing to do very well so far in 2025. What have we seen so far in terms of some specific sectors, Brandon?
Yeah, I think from the sector perspective, somewhat of a similar story where in the last month you're not seeing anything really outperform or really underperform. If we look back to the webinar last month, you saw sectors like technology be up, 20% in the last month, where right now, that's up about 2.9%. So it's really kind of recognizing where things have recovered in the market. Obviously, April, there was a large decline. It then recovered and kind of shot back up. And right now, it's kind of just continuing that, a little bit from that positive momentum. So I think it's important to note, technology, communication services, still doing well, especially if you're looking at year to date. Technology up 4, communication services up 7. You have seen energy do well in the past month. And, similar to kind of last month, we've still seen healthcare kind of at the bottom of the sectors. And similarly with consumer discretionary, which also has a super large holding towards Amazon and Tesla.
Yeah, I think one interesting phenomenon that we've seen appear recently is some of those sectors like technology and communication services can actually act a little bit defensive in certain types of markets. So if you look at companies like Netflix, consumers aren't really looking to cancel their Netflix subscriptions unless there's a severely deep recession. That can almost act as a defensive position. Just as Google, people aren't going to stop Google searching or using YouTube. People aren't going to cancel their Spotify subscriptions. So we've seen some other types of sectors and companies almost act defensive in this type of market, as opposed to only looking at those typical healthcare, utilities, and consumer staples. Those are the traditional defensive sectors. In this type of environment, we've seen some other types of companies and sectors almost act as defensives. Interesting.
I still think this chart shows that artificial intelligence is kind of the top news story that you're seeing. I mean, the Nasdaq being now outperforming the S&P, outperforming the last month. Tariffs have kind of taken a little bit of a backseat. Artificial intelligence and earnings are back. One of the stories of artificial intelligence is how much energy it eats up. So the fact that energy and technology are some of the best performing, I think it's a little bit more in line as people look to that forward. Communication services, somewhat kind of similar, right? It's data processing and need for data and transmitting data.
Mm-hmm.
So I don't know. I mean, the international stock market doesn't have a ton to do with artificial intelligence. That seems a little bit more like dollar weakness, but the energy technology outperforming this year seems to be a little bit, still taking that AI 2024 story to the next spot.
Mm-hmm.
You guys agree with that, or?
Yeah, definitely. I think artificial intelligence is continuing to be a very relevant trend. And as you mentioned, the dollar has continued to be weak. If we look at this next slide, year to date, dollar's down 9%. Over the last month, it's down 1.3%. So we've continued to see weakness there. And we're coming off a week where the Fed had a meeting and they decided to not change interest rates. If we look forward to July, there's a very low probability of a rate cut. So about 90% chance that the market is pricing in of no rate cut there. And they're very concerned about the idea of stagflation. That's something that they mentioned recently, which is high inflation, but also high unemployment and a weaker, stagnant economy. So they're really trying to balance out stimulating the economy potentially by cutting rates, but also being worried about inflation on the other side of that. So it's a bit of a balancing act that they're forced to take into account. And if we look forward to September, it's about a 50-50 chance of a 25 basis point rate cut.
I think what's observably true about the market right now is despite some of these concerns of stagflation, the dollar declining, interest rates kind of stubbornly remaining high, tariff concerns, attacks in Iran, the continuation of the Ukrainian war. I mean, if you just looked at the headlines and I said to you, and the market's down 25%, you'd be like, okay. But it's not. It's up 2.2% from the beginning of the year. So I think that to me is one of the screaming headlines that I always think about as I've been watching this market. It's like, this thing is strong. Wow, is this thing strong? In the face of adversity, just pushes right by. And sometimes people say that and I'll talk to folks in the industry and they'll be like, I know it makes no sense. And it's like, no, well, it's happening though. So it's got to make sense. And if you kind of make sense of it, it's that the market's strong. People want to buy things. Even, I saw a note out today. Someone was talking about the Cathie Woods ARK Index, back up and breaking out. I mean, it's just, there's a lot of propensity to go out and buy the future. People are excited about this new technology. Everyone's using ChatGPT. Everyone sees the immediate power and impact that it has. So I just think this adoption cycle is just happening a little bit different than we've seen in the past. And maybe it's going to be like the tech bubble. I don't know. But the market is incredibly strong in the face of everything, and that shouldn't be ignored. I think people should look at that and say there's buyers out there and they want to buy, and this technology could be revolutionary. So, yeah, we'll keep watching. We'll keep doing webinars.
Yep. And I think the Fed also is looking at those tariffs and how are those going to impact inflation. I mean, they only kind of just have gone into effect. Trump claimed they've collected about 88 billion so far from tariffs. So how does that kind of play into the inflation number? And that's something else that the Fed is kind of taking into consideration as they're weighing the pros and cons of rate cut or no rate cut.
Yeah, it is important to think about tariffs if you think about them as corporate tax increases. So in the first administration, the Trump administration lowered corporate taxes. The 10% tariff is, I think I heard one announcer talk about it as a 3 or 4% corporate tax. So it's really not, if we just have that 10% standard level across everything, it's really a corporate tax on people who import things. They can either try to push it on to consumers, which they normally will do over time, or they can just eat it in their margins. It's one of those things where if we end up getting the tax bill and cutting corporate taxes anyway, well, this is just increasing corporate taxes on imports. It's kind of, and I think that the excitement over the tariffs has been dismissed a little bit as some of the temperatures come down and people have had time to process and think about it in a more constructive way and less of I don't know, it felt very bargaining chip and very unpredictable for a period.
Yep. Taking a look at some of these recent news stories over the last month, as Bobby mentioned, the Iran conflict, especially over this weekend, the United States starting to get involved in that. So that's been a little bit jarring on the news cycle. But what effect does this have on markets? I think there's certain types of assets that typically react to this type of news when there's geopolitical tensions and conflicts. We look at oil prices. Since Israel and Iran kind of entered this conflict, oil has shot up about 10%. So there's kind of fears over supply there, and that tends to raise that oil price. If you look at safe haven assets like gold and silver, those can tend to do well in this type of environment with geopolitical tensions. So we've seen that slightly outperform the S&P 500 since the Israel and Iran conflict started. If we look at the defense sector or even cybersecurity, those types of industries tend to do well when there's wartime or geopolitical conflict. And then just general market volatility. Typically, this can cause a little bit of unrest, a little bit of more uncertainty in just the market in general. So these are a few of the different parts of the market that we're looking at, keeping an eye on, watching how they evolve over time as the conflict evolves. And it's just really important to remember it can create a lot of noise and opportunity even in the short term, these geopolitical conflicts, but it rarely affects like the long-term fundamentals of the market. So really just keeping in mind your individual plan, making sure that you have that long-term goal in mind, while also keeping your ear kind of close to the ground and looking out for those opportunities. That's what we're here for and what we're looking at.
Yeah.
Well, we also know that.
Uh,
I was just gonna say, we also know that just in general, if we look historically, the Middle East conflicts tend to not really roil markets very, very much.
Mhm.
And a lot of that volatility is going to be based on Iran's response, as opposed to just, what happened over the weekend. It's gonna be really what's gonna happen over the coming weeks. And are we going to see any of that volatility or any sort of response? We don't know.
Yeah, and I think from the general market volatility point that Sean made, if you remember the slide on the last webinar we did, where it's showing, if you miss the 10 best days, if you miss the 20 best days, how does that kind of affect your initial lump sum return? And I think that's kind of just something important to keep in mind as there is volatility in the market, whether it's now, a few weeks from now, a year from now, kind of taking out that emotion and creating that game plan so what's my strategy moving forward? How am I taking advantage of the opportunity and really recognizing where it is in the market? So if there is a decline, is my strategy the same or should it be adjusted? And really, taking a look at that. And that way, you're kind of ready for it and, you're not just experiencing it and trying to figure out day by day, what should I do? How do I manage this? What shift should I be making? You already know step by step what should kind of be happening.
Yep. Another story we've seen, some recent IPOs really impress. So some companies, Circle and CoreWeave, have had IPOs over the last couple of months, and they've had extremely strong performance since IPOing. So I think this shows that there's an appetite for risk among investors out there that are looking for innovative new investments to get into. Just to give a little bit of background, Circle is a company that offers a stable coin on the app Coinbase, and CoreWeave produces infrastructure and software to support generative AI like ChatGPT. So I think these go hand in hand with some of those big trends that we've been talking about: cryptocurrency, artificial intelligence. This is kind of firsthand evidence that those trends are still very much alive, and people are looking for opportunities to take advantage of those trends in some of these new innovative companies like Circle and CoreWeave. And just generally, 2025 so far has been a very strong year for IPOs. If we look now through mid-June versus where we were at in 2024 through mid-June, there's about an 80% increase this year in IPOs that we've seen. So it's been a strong market for companies looking to go public so far this year.
Yeah, I mean, I think that's kind of, Sean, to your point. One of the bigger takeaways is that through the artificial intelligence and crypto, of people still wanting to be a part of that, even with whatever news or whatever takeaway they may have, that these are still strong points in the market that are capturing everyone's attention.
Also, a lot of those parts of the market aren't that impacted by things like tariffs and some of the other concerns. And now with the perception of lower regulatory environment, or a more conducive regulatory environment, there's so much uncertainty that have been brought into some other parts of industry, and meanwhile, normally these areas, they'd be very uncertain. Like, what's going to happen with artificial intelligence? Where's this all going to go? We have uncertainty there. But if you're not even really certain what trade policies are going to be, that uncertainty seems lower in the face of some of the other uncertainties. And it's got that growth kicker behind it. So it makes sense that the capital flows as people feel like it's an uncertain world and they're just trying to figure out where to put money. Either one, they'd go to treasuries or go into things that are no risk, but instead they're actually going towards risk and they're just making more calculated, well, I know this is going to be successful. And so let's see where this goes. Almost concentrating all their risk into a couple small ideas. That can sometimes lead to some bad outcomes in markets. So, we don't believe that's necessarily the total proponent, but it is interesting to just kind of see how things are shifting in this environment where you would have thought, people would take a moment of pause, but we are pushing right ahead and markets continue to move higher.
Yep. Yeah, I think that kind of goes back to that defensive nature of some of the technology and communication sectors. They're not as impacted by those tariffs as some of the major retailers might be.
Well, even just take healthcare, right? I mean, we were talking about decreasing healthcare costs by 80%,
Yeah.
a couple weeks ago. So what does that mean to a healthcare company, which used to have consistent revenues and, wait, how does trade policy change? Where are they going to source their chemicals and drugs from? So
Yeah.
you've got so much uncertainty in so many different spots. It might have looked defensive once upon a time, but now it
Yeah.
seems scary maybe. So yeah,
True.
the market's just adjusting, adapting, and doing its typical evolution.
Sure. All right, yeah. So, here we have a chart. So it's basically the percentage of time from your initial investment in the S&P to where it would be positive returns. So you can see from your initial investment, for example, 1 month later, what's the percent of time that it would be positive? So it's about 63% versus if you just look at 10 years from now, that's around 95%. So, obviously it's kind of a simple chart in the sense of it's just from that initial investment. You're not managing volatility, you're not adding in future contributions or anything like that, or making adjustments to the game plan. But I think it does kind of show a few good points. One, kind of timing the market from a short-term perspective. It's difficult to do. Who knows what news story could come out a month from now or 3 weeks from now that could kind of flip the script in a sense. But, so I think it's almost recognizing, short term, and then also continuing to have that long-term mindset and really recognizing the opportunity, which we kind of talked about, on the last slide as, where are we in the market? Is there a market decline? Is there an opportunity to make those contributions, whether it's something from consistent like dollar cost averaging, or if you have excess cash to put in maybe a higher lump sum, but recognizing those short-term volatility and that way you're kind of looking at still investing with that long-term mindset and kind of matching the two to make sure you have a good, sound financial plan in place and really have that strategy and game plan laid out kind of before there is any volatility in the market. So, yep.
And guys, as we start to, continue to navigate markets throughout the year, things come up like how does energy impact my portfolio with the current environment or news cycle that's coming through, or, should we be investing here versus there? What are we, what are some hedges we can put in place to kind of make sure that we feel a little bit better? We do have an open line to communication, so we always encourage people, hey, listen, make the phone call, have the conversation. We're here for that. And, we don't have any, there's no, no secrets here. We don't have any secret sauce that we're hiding from people. So if you have any questions, feel free to reach out. And until next month, this is the investment committee. Guys, any last parting remarks?
Enjoy
No,
the summer.
we're good. Yeah. Have a great summer.
Stay
Happy
cool
Fourth
out
of
there.
July.
Stay hydrated.
The hot one.
It is a
Probably
hot
not going
one
to do
today.
it, a mild summer this year. So,
No.
if you want to be in the air conditioner, take advantage. It's energy. Talk to you soon.
All right, guys.
Take care.